I mean, the reality is that growth, generally has a high correlation to valuation or higher correlation to valuation than cash flow or EBITDA in the public markets. So you're largely focused on that as you think about creating value for public shareholders, at least in the world of software. Obviously, it varies by industry. Growth is what, like when you look at some of these like analyses that banks do, the correlation to growth is relative to valuation is really high. So that is how you think about building a successful public company. And in the private equity world, clearly growth is still important, right? I mean, they're not buying these assets to, just sit there and run in place. But they're also putting a lot of leverage on the businesses they acquire. That's the model. And so you need to drive a certain level of cash flow to be able to support that leverage. And so the approach to, building a business becomes a little bit more balanced, right? You have to think about kind of both sides of, okay, well, how do we continue growing, but how do we also generate meaningful cash flow so that we can support the debt load that we're putting on the business? And so there's just a different thought process around it.